Welcome to a new podcast episode from the Fireside Chat series, a highlight of the Deal Forum at the prestigious New York Athletic Club in the heart of New York City. We are making our Fireside Chats available to those who couldn't be with us in person and for those who would like to experience and listen to it again. Hello there, M&A Advisor community. This is Roger Aguinaldo, and welcome back to the M&A Advisor podcast. Since 1998, the M&A Advisor's mission is to recognize achievements, provide thought leadership, and connect professionals in mergers and acquisitions for the purpose of improving your deal-making craft and accelerating your deal flow. We are so glad you're joining us for this insightful and inspiring podcast conversation curated for mergers and acquisitions professionals. Whether you're an aspiring deal maker, a seasoned professional, or just curious about the world of mergers and acquisitions, you'll find something valuable and relevant in our podcast. Our goal is to bring you the best insights, stories, and tips from the experts who've been there and done that, so you can learn from their successes and mistakes and take your deal-making skills to the next level. But before we dive into today's episode, we have a small favor to ask you. If you enjoy listening to our podcast and find it useful, please consider following us on Spotify, Apple Podcasts, and YouTube, and subscribing to our M&A Alerts newsletter. You can find the links in the description below. This will help us reach more people like you and grow our community of M&A professionals. It will also let us know that you appreciate our work and want us to keep producing more quality content for you. Plus, you'll never miss an episode, and you'll always be in the loop with the latest trends in the M&A world to improve and accelerate your deal making. So please follow us. You are the reason we do what we do, and we couldn't do it without you. And now for today's podcast.
Good morning. So, Rodge, this is a conversation we should say up front. This is not a political conversation. This is a conversation about business and law and what we expect over the next 4 years. M&A Advisor titled this a post-Biden administration, but really what we're talking about is what is Trump 2.0 going to look like as we move forward. And I think, in setting the table a little bit from a political perspective, in looking at what's going forward, and when I say it as we think about what's happening, I think it's important to understand, and you and I have the white hair to show it. We've been through, both of us, a series of transitions between conservative and progressive administrations, right? So, if I think from the Ford-Nixon years going to Jimmy Carter, 8 years of Reagan's conservative era, as he went through that, moving on to Bush 1, then the Clintons, then Bush 2, then the Obamas, and now the Trump world. The fact of the matter is, I think we have to recognize in kind of while there may be aspects of the next 4 years that are not exactly normal, it is in fact been our history over the last 20 years, 25 years, 30 years that we get changes in administrations constantly, and lots of things change in terms of regulation and approach and philosophy. So I think as we put that as perspective, and I know, by the way, just a footnote, Donald Trump won't be the only person to come back for a second term after having been out of office. Grover Cleveland was our 22nd and 24th president. So when you take a step back, things are more the same than they are different, and I would argue. Now, the one thing I think may be different in this administration is the mission that has been discussed about massive deregulation and dismantling and downsizing of the federal government, and what the impact that's going to have on business. So I'm going to start there and ask you for your perspective on, what do you think is going to happen in connection with the dismantling of the deep dark state, and how is that going to affect business and M&A?
I think, Jack, you've laid the table very well, because throughout our experience, it's been a question of how far does the pendulum swing. And it's sometimes a lot, sometimes just a bit. But there's a legitimate question here, whether it's the pendulum's going to go right off the pivot. and so that we have something radically, truly radically new. And that will depend in very large part on an unknown, and or maybe two unknowns. Number one, how interested will the administration be at the very top in financial services? The vice president-elect was a member of the Senate Banking Committee. He was active there. Does he take a role? I don't think we know yet. And none of the key positions affecting financial institutions have yet to be filled. So do we have those with a professional background in financial services, which would lead to predictability, or not, in which case it becomes far less predictable? Having said all that and all those qualifiers, it's just a question of how far does deregulation go in the federal government. But deregulation may not be a linear positive for the banking industry. Clearly, it would be better for the industry if requirements were reduced, if consolidation were easier. But the banking industry is not alone in the financial services ecosystem. And they have a question as to whether the array of non-bank financial institutions will also experience a deregulatory approach, creating more competition for banks.
Well, one of the things that I think we know from Trump's prior administration, and I think we do have to remember the fact that this is a smart, intelligent person who is coming back, who's been very, very successful in both marketing his world view of the world, his worldview, and providing leadership in that era. I think we have to recognize that whatever one's political views are, this is a guy who won all the swing states, who won the popular vote, who's coming back with a mandate different than he had in 2016, and has had 4 years out of office understanding the problems he had the last time he was in from his perspective. I think the other thing we can understand is that I think it's fair to say that he is a transactional individual as opposed to necessarily, falling on the sword on principles. And when you're in a transactional world, there's generally winners and losers. There are people who do well in a transactional world and people who do not so well. And I'm asking you if you have any views on, if you were sitting around saying, who are the transactional winners? Could you have any forecast in terms of who's going to do well over the next 4 years as opposed to who's going to do not well?
So I think if I were to pick a single winner, it would be the crypto industry. They spent a ton of money. As an industry, we're probably the single largest contributor, not just to the president, but a president-elect, but to a raft of representatives and senators. And they are largely transactional. They have mounted a very successful campaign, and there could be quite a future. The president-elect himself has said, actually praised the industry and contrasted it with, in his views, stodgy banks. So that's a set of winners. I think the other set of winners are going to be the banks that understand the opportunities, and we are going to see, I believe, consolidation. All deals are not alike, and moving quickly and getting your first deal, the one you really want before somebody else gets it, is important.
So in recent presidential elections, we have all felt the impact of what people say dark money or billionaire money or the billionaires club paying around, but perhaps never more so than in this last presidential election, right? And we now have, putatively the richest guy in the world spending his time at Mar-a-Lago with the president-elect, sitting in on selection meetings, being very vocal on X, about what's going on. And so there seems to be an intersection between, if you will, the super elite and the new administration in a way we've not heard before. And I think that this is one of the places where things may be different. How do you think about that? How do we think about the influence? This isn't just, as you talked about, the influence of an industry and industry lobbyists. This is influence of particular individuals who have points of view, who are welcome, in the White House, welcome in Mar-a-Lago, welcome in the president's inner circle. And it's been really sort of amazing to see, because Elon Musk was not in that circle a year ago and is now in the center circle. This is a guy who, in supporting whatever one thinks of the nominee for the Attorney General of the United States, you have Elon Musk out there saying that, hey, Matt Gaetz is the best thing since sliced bread. He's judged red with an axe to grind, was the latest quote on X, right? How do we think about the dynamics from an M&A perspective and from a deal perspective of having people with immense wealth having that kind of influence on the administration?
Yeah, I mean, I think the question bespeaks the answer. Let's say that you are a competitor of Elon Musk in any of the many fields where he has been so successful, and you're bidding for a government contract, or you want to engage in a merger which could present a more effective competitor to one of his businesses. I think you would have to have second and third thoughts about whether you proceed with the bid or the merger. You used the word, I thought, very aptly, transactional.
Right. And that's, I think, something that we haven't, I also think about adding to the transactional, one of the other dynamics we're going to have in this administration, and I think this is lessons learned from Trump 1, right, is there seems to be doubling down on the goal of surrounding the administration and surrounding the president with loyalists, as opposed to the best people from the job. If you compared many of the people that President Trump nominated for the cabinet in his first administration, while someone might not like their politics or like their principles, they were objectively qualified for their positions, right? What's happening in this current administration it seems to be a flight towards loyalism, right? Do whatever the president wants, not having, almost saying, I'm not going to have any gap between me and the vice president like I did last time, right? And how does both the influence of the elite and the run towards loyalism and having loyalists across the cabinet and across the administration, how do you think that, combined, I guess, with the Supreme Court's very clear messaging around the widening powers of the presidency, how do you make sense of that going forward in terms of when you're advising clients about what to do and how to think about things?
So I'll go back to unpredictability. If you have individuals who are running an agency who have no real experience in the field, then the outcomes are, by definition, very difficult to ascertain. You can't go back and look at a record. And so as you put it, again, I think it was well said, Trump 1 versus Trump 2. With Trump 1, you could again disagree with a number of the individuals, but you had a pretty good idea of where they would come out on issues. With the current nominees, it's far less predictable, and uncertainty is not great.
So there are those among us, including people in this audience, who would say volatility is a great thing, right? You make money on volatility, at least some folks do. And the question is volatility a great thing? Because I think one of the things that can be assured over the next at least several years is there is going to be a very significant amount of volatility in the markets, volatility in decision making, volatility in my view, in terms of winners and losers, and some for the good. For example, I would argue, as you know, I've spent a lot of my career doing deals in the transportation world, right? I am almost morally convinced that Spirit Airlines would not be in bankruptcy under a Trump administration, that merger would have been approved and they would have moved forward, and you wouldn't be going through the massive restructuring now that one of our low-cost carriers is going through that might have otherwise been avoided. And who knows, by the way, whether whether this change in administration will have any impact on that deal, maybe resurrecting. Who knows what's going to happen as you move forward. But so there are people who could be clear winners and can be favorably impacted. There are industries like, for example, the EV industry, another area in transportation, where the president-elect has indicated that their policy is going to be to remove the tax credits, remove tax incentives for an industry, which would, notwithstanding the fact that Mr. Musk is in the middle of that industry and maybe at the top of it. So there are winners and losers, and as you think about it, how do you think about this, the volatility, and how do you think about the trying to manage and trying to advise people on how to do deals?
So I agree, volatility can create some real winners. But I think if you look at the economy as a whole, American business as a whole, American people as a whole, it is difficult to argue the volatility is good for the group. Again, you can have massive winners and losers, but is that what society really benefits from? It's, maybe it's a philosophical question, but it's not a for sure either way. I do think you can make, and I've said there are a lot of questions, but there are also, I think, some judgments which can be made. And I agree with you. Spirit Airlines would not be in bankruptcy. That deal would have been approved. I think more generally, what you will see, which should be conducive to mergers, is a shortening of the processing period for whether it's HSR or direct review, as it occurs, for example, in the banking industry. That period of time is very detrimental to mergers. So knowing sooner and with greater certainty, that's where I think you will see a benefit.
Let's talk inflation for a minute. One of the anomalies or maybe ironies of where we are about to go is that many economists will look at the both the plans of the Trump administration, but also the track record of Trump 1, as saying that President Trump's policies tend to engender inflation as you go forward. For example, if tariffs are in fact anything close to the tariff program that he's talked about on the campaign trail gets put in place, that is going to translate in significant price increases in the U.S. across industries. And so it feels like we're headed into an inflationary cycle as opposed to a deflationary cycle. I'm curious whether you agree with that and how you think that will affect business and the cost of capital.
So I think it is a significant risk. The history of tariffs is, let's say, unpredictable in terms of its inflationary push and pull. I mean, you went back, I thought, well, in history to Grover Cleveland. Well, high tariffs were an article of faith, basically from the founding of the Republican Party. And that produced some high inflationary eras and not so high inflationary eras. So it's going to depend on how targeted they are, what goods they apply to. Tariffs can be more tailored to dampen inflation. But if we I think what is beyond dispute, if we wind up with a high inflation, we are going to have an enormous problem because of its impact on a deficit, which if our national debt costs 200 basis points more, the chances of reducing are zero.
Let's finish. I wanted to actually talk briefly about immigration, not the policy, not the southern border, but the effect on the economy of taking 10 million or 15 million people and sending them away. Because I think that, one of the things that I think we recognize is this: our economy is built on having people willing to do jobs others would prefer not to do, and that tends to be immigrants in doing this. But I think I'd rather end on the Fed, because I think one of the questions that and I mentioned the inflationary cycle because one of the things that Chairman Powell has said in recent days is he has begun to wave the caution flag after having even made a cut in rates, saying, hey, the economy is doing pretty well, not so sure we need to cut rates as aggressively or so quickly. And it seems to be sort of, in my view, and I've been a Fed watcher most of my career, thinking about what, thinking that the Fed is going to kind of slow down and be cautious. We have a president-elect who believes that he should control the Fed and that they shouldn't be independent. In fact, has suggested that he should have somebody from his administration sitting on the Fed board. And how do you think about, and what's your view of the independence of the central bank via any administration, not just the Trump administration? Let's make this a more philosophical question about, what are the risks and benefits of independence of the central bank, and what do you see happening?
So let me start with, and I'll come back at the end to monetary policy, for which I am unqualified to say very much, but the Fed plays critical roles. It's a key regulator. It operates 3 basic payment systems, and it is the entity, if we get into a financial crisis, that is called upon to solve that problem. 2008, 2019, 2023, it was the Federal Reserve which kept us more than anybody else from a financial calamity. And if you do not have a strong, independent Fed, each of those other issues, I think, magnifies significantly in risk. On monetary policy, again, not an economist, not terribly knowledgeable, but I would say the world at large would be very concerned if our monetary policy was not determined, not totally independently. Obviously, you need to take into account a number of factors, including the president's views. But at the final point of a decision, independence, if you don't have that, what does that say to the rest of the world? And what does it say about the position of the U.S. dollar as the reserve currency if there is not confidence in our central bank?
And that'll be the last word. Thank you very much.
We hope you enjoyed this episode and learned something new from it. If you have any questions or comments for us or any of our guests, please feel free to leave them in the podcast platform of your choice or send us an email at editor@maadvisor.com. We would love to hear from you and get your feedback. And if you haven't done so already, please follow us on Spotify, Apple Podcasts, YouTube, and subscribe to our M&A Alerts newsletter at the links in the description or on our website at www.maadvisor.com. This will help you stay updated on the latest M&A interviews and trends and support our podcast to grow and reach more listeners like you. This is Roger Aguinaldo, the creator and founder of the M&A Advisor. Thank you for tuning in and being part of our M&A Advisor community. Until next time, stay safe and happy dealing.